Let's talk more about the bank earnings and what the takeaways are. UBS large cap banks and consumer finance research analyst Erika Najarian joins us. Overall, Erika, what picture did the banks give you about their strength and the economy overall?
Yeah, I think what the banks really told you today is higher interest rates is actually good for them. So as you think about what's really driving the beats here, the banks essentially earned more on loans and securities than they paid out on deposits. And while a lot of the commentary that you guys noted early at the top of this hour really, looks caution ahead, what we like to think of in terms of that revenue power, that net interest income, is it's a firewall. It's a firewall to, potential higher credit losses as we think about a deteriorating economy, and it's a firewall to capital.
What did you make of the loan loss provisions? We have a great chart from our news desk editor, Robert Hum, that looked at the difference of what everybody set aside this quarter versus the previous quarters. It looked like they're a lot less. Here, we're showing it on the screen. The green chart, I think, is where we are, right, or the blue, sorry, at the end is where we are right now. What did you make of the information we're getting and how the banks are preparing?
Yeah, I noticed that too. That really definitely popped out. But if you look at the first 3 quarters, you could see that the banks built significantly early on in this year, right? As they were preparing for, 5-6% unemployment. And I think as we have more information and more data, they're continuing to build for things like credit card, but releasing reserves in places like home lending, for example, or certain corporate loans. So while it does look like a step down in terms of the actual cost, reserves continue to move higher, and banks seem to be continuing to prepare for the rainy day.
Which one are you getting the most questions on from clients? Which call are people most interested in, or which one's most controversial?
So I think that you could see clearly that JP Morgan continues to be, drawing the most interest, right? Because if you think about the strength of that net interest income, and if you think about what their guidance implies, for the run rate of net interest income for 2024, with the puts and takes, they could make above 90 billion just in net interest income in 2024. Now, JP Morgan downplayed that on the call, but they've been downplaying their net interest income power, quite frankly, over the past 4 quarters, and they keep beating expectations. I think where the most questions I'm fielding is on PNC. You could see that PNC is underperforming the group. Their call is happening now, or it will happen in an hour. And I think the management team is probably ripe to explain, what you were saying earlier, what those cost cuts actually mean, the layoffs actually mean for the bottom line. Because I think the slide wasn't very clear on the release.
Erika, pretty nice beats across the board in investment banking, and a lot of commentary about the M&A oven starting to heat up a bit. Do you have big aspirations for what that might look like in, say, the first half of next year?
Not really, because I feel that trading seems resilient, but I feel like investment banking, while there are some small green shoots and the pipeline and the activity in September and the pipeline is good, I think I think we're going back to sort of normal is going to be a little bit slower. I mean, think about how much uncertainty we just injected into the outlook over the past week, and think about, we're going to start to talk about the election in 2024 pretty soon. And so I actually think that while there are green shoots, all those components suggest to me that the recovery in investment banking in terms of full recovery may not happen until after the election.